Hi everyone, I'm Oliver and today we're diving into something that affects every trader at some point. Loss aversion. Or in simple terms, how the fear of losing can mess with your trading decisions. Now, if you've ever made a bad trade and felt that gut-wrenching sting only to realize it hurt way more than the joy of a successful one, you've experienced loss aversion. It's that psychological quirk where losing feels a lot worse than winning feels good, even if the amounts are the same. Let's say you lose $100. It's like a punch to the gut. But when you gain $100, yeah, you're happy, but it doesn't quite compare to the pain of the loss, right? That's loss aversion in action. And it doesn't just happen by chance. There is actual psychology behind it, in fact. Two guys named Amos Tversky and Daniel Kahneman coined the term back in 1979, and their research shows that this phenomenon is baked into our brains. Our minds are wired to prioritize avoiding loss more than chasing gains. It's a survival mechanism. And when you're trading, it can lead to some pretty irrational decisions if you're not careful. So, why does loss aversion happen? Well, it's a mix of emotions and cognitive biases. Losing money triggers stress and anxiety, no surprise there, but there's also something called confirmation bias, where you start looking for evidence to support your beliefs even when the market's telling you otherwise. Add market volatility to the mix and suddenly, traders find themselves clinging to losing positions, hoping for a miracle. Here's a typical example. Imagine you buy a currency pair, let's say the Euro-US dollar, but the price starts dropping. And instead of cutting your losses, you hang on, convinced it'll bounce back at some point. Spoiler alert, it doesn't, and your losses just keep growing. This loss aversion, this is loss aversion at its finest. Or worse, maybe you start doubling down trying to win back what you lost only to find yourself in a deeper hole. So, how do you know if you're falling into the trap of loss aversion? It usually shows up in how you think and feel. Maybe you start having negative thoughts about your trading skills, feel anxious about future trades, or even feel emotionally numb. If you're holding on to losing trades longer than winning ones, or moving stop losses hoping the market will magically turn around, you might be under the influence of loss aversion. But don't worry, loss aversion isn't a life sentence. There are strategies to keep it in check. First off, always plan your exits. Know in advance when you'll close a trade, whether it's for a win or a loss. Make that decision before emotions take over, because once you're in the middle of a trade, it's much harder to stay objective. And if you are trading pretty much anything, always use stop losses. This will save you from emotional decision making in the heat of the moment. Another key point, focus on the long game. Trading isn't about quick wins, it's about long-term growth. If you're too fixated on short-term losses, you'll drive yourself crazy. Instead, think about what you can achieve over months or even years, and you'll find that those day-to-day losses don't feel quite as catastrophic. Reviewing your trades is another big one. Sure, it might sting to go back and look at your mistakes, but it's the only way to improve. And every strategy needs adjustments, and understanding where things went wrong and where you can refine your approach. And listen, sometimes you just need to take a break. If you feel like you're getting caught up in a loss aversion, step away for a bit. Come back with a fresh perspective. Now, there's a guy named David Deutsch, a British scientist, who has this great advice for overcoming challenges, and it applies perfectly to trading. He says, problems are inevitable, and we have to admit that. There's always a solution, and the key is to keep learning and adapting. So when you face challenges in trading, don't get discouraged. Learn from them. And lastly, let's talk about emotional control. It's impossible to eliminate emotions from trading completely, but you can minimize how they impact your decisions. Simple things like deep breathing or meditation can help keep you grounded. And hey, setting stop losses in advance can also really help these emotions to help keep them in check, because you've already accepted what you're willing to risk and lose. Another great tool is diversification. Don't put all your eggs in one basket. Spread your investments around to reduce the emotional impact of a single loss. And finally, stay realistic. Losses are part of trading, and expecting to never lose is just setting yourself up for disappointment. Focus on minimizing those losses and keep your goals achievable. So, there you have it. Loss aversion may be a powerful force, but it's not unbeatable. By planning ahead, sticking to your strategy, and managing your emotions, you can make smarter trading decisions and keep loss aversion in check. Thanks for tuning in, and remember, trading is a marathon, not a sprint. Keep your head clear, your emotions steady, and you'll find success in the long run. Happy trading, and I'll see you in the next one.